Hi everyone, my name is Emily Williams with the Don Williams Group, and today I am interviewing Justin Kozara with Movement Mortgage, and we're going to be talking about a few different things today. First things first, we're going to talk about Fed Day and what happened. Then Justin and I are going to provide you with an example of the life of the loan and mortgage, your mortgage payment with the varying interest rates, and then we're going to give you a few ways to leverage your home and different loan programs. So first things first, Justin, what happened yesterday at Fed Day?
So the Fed decided to hike rates, as we all know or saw in the news this morning, by 0.25%. What that really means is, one, our buying power is decreasing and our payments are going up on our monthly mortgage payments, which make us harder to get qualified for some people, especially that are close in their debt-to-income ratios. But the really key thing out of that is they want to hike rates 2 more times this year.
Wow.
And are looking at forecasting 3 times next year. So we're talking about 5 more hikes in a 16, or no, really, an 18-month period. So that is definitely astonishing.
Wow. So with that being said, with rates most likely going up 5 more times in the next 18 months, Justin and I decided to give you a visual of the interest rate, it going up, the list price, and the down payment, and then the life of the loan. Now, a good rule of thumb is when interest rates go up 1%, you technically lose 10% of your buying power. With that being said, in this area, appreciation typically goes up 4% a year. So our first example, my pretty handwriting and markers. So the interest rate is 4.75 on a $300,000 home with a down payment. We did 20% as a clean example for a conventional loan. Your monthly payment would be $1,252, and then times 360 months, the life of the loan would be $450, $720. So as you can see, this is on a $300,000 home with the current rate, which is 4.75. The next example that we have for you is if interest rates go up 1%. So we did 5.75. The list price we increased because prices are rising in this area. The down payment would also be larger, so it'd be $62,400, and then your monthly payment would also increase to $1,457 times 360, and then the life of the loan would be $524,000. Thank you. So then we subtracted those numbers. And actually, if you purchase now, it would save you $73,800 in the next year, and that's just the next year. So what we're going to do now, and also keep in mind that, yes, interest rates are rising. However, they are still historically low. My parents paid 18% on their first home. So granted, 5.75 is still it's still a really great rate, but there are ways to leverage that to purchase now. So some of the ways to do that, one example is a cash out refi, which I know Justin's done a few of. And a key factor in that is your home cannot be on the market when you do a cash out refi. Also, you can put 5% down on a conventional loan for a primary residence, 10% down on a second home, including condos. So for condos, you can get away with only putting 10% down. Also, you can put 15% down for a pure investment, and then rates depend on multiple factors. So
your credit profile, your credit score is one of the key factors on your rate. Also, with the loan program, different loan programs have different rates. FHA, USDA, VA, and conventional all have different rates. So definitely finding the best factor for you to fit in that profile. And also down payment affects the rate as well. That's one of the other factors in that. So they all kind of go in, but we'll definitely find the best rate and best loan program for you.
Perfect. And I know that Justin has been with Movement Mortgage now, and he's won some awards, correct?
Yeah.
Do you want to talk about that?
Well, our top 100 just came out, and I'm number 11 in units so far this year. So,
that's awesome.
Our team is growing and happy, just like your team's growing as well. So yeah, things are looking bright at the beach.
Perfect. And I have personally worked with Justin Kozara. He's excellent, and he does find creative solutions for tough problems. So definitely give him a call or check him out at...
It's www.justinkozara.com.
Perfect. Well, thank you so much for meeting with me today and discussing everything. Do you have anything to add?
Pretty much our whole talk here is, by waiting just a year, $73,000 is pretty astonishing for what that can do on a 30-year mortgage. So, if you're thinking about buying in the next year or in the next 2 years, let's definitely have that conversation, sit down and talk, call Emily, and find out what ways that we can get you in the house now to save you money in the long run.
All right. Well, thank you so much. Everyone, enjoy this beautiful day. I will see you soon. See ya.